All right, so in chapter 5.1, we understood, or kind of understood, how to recognize periodic inventory and just to be able to journalize it. Now, of course, with every purchases of inventory, we also have to understand that there's also going to be a purchase returns and allowances, and there are many, many reasons to why we should return things. So, for many reasons, such as, for example, maybe the vendor decided to ship us the wrong item. Okay, that happens a lot. Or maybe items get broken during shipment. Okay, or even things become defective, right? Let's say, for example, like you purchase a bunch of electronics. You want to test to make sure they work before you sell them out to the public. Okay, other than that, too, maybe, there was a cheaper vendor available and they provide the same quality. Whatever reasons that you decide that you just don't no longer need the item. Okay, customer service plays a huge factor. Okay, especially if a vendor is just like doing all this stuff for you, sending you the wrong items, not correcting your, your purchase orders in time or something like that. For any reasons that you feel that the company is just not doing justice for you, then that could be a definite reason why you want to just end ties with this vendor. So with that being said, those could be any contributing factors to reasons why you want to make a return. Now, oftentimes vendors, because you're going to be the primary customer of them, right? Because you're, as them being the manufacturer or the wholesaler in a standpoint, you're looking to buy even maybe close to thousands of items so that you can sell it out to the public. So you are pretty much going to be one of their good customers because you're buying in bulk and you're buying a lot of their inventory. So what they're going to do is they're going to do anything possible for you to keep the relationship with you. So that includes having discounted prices, special offers, or even unlimited return policies. And then, of course, even a money get back guarantee, right? Because they don't want to lose you as a customer because you're a big bulk of their sales, right? They want to ensure that they lock the position that they are consistently having someone to sell the product to, right? So with that being said, therefore, we're going to take a look at this example here of what happens when we buy something and then we return it. So here's the example. Once again, on January 1st, you decided to purchase 100 coffee mugs on an account from Cuppies Co. Once again, at $1.25 each, with a freight costing you $100. So first, let's practice receiving the items and journalizing this transaction. So in this case, from here on out, we're going to be using the gross method. Okay, so how am I going to recognize this purchase of periodic inventory?
Would it be a purchase expense?
Yes, correct.
$125.
Correct.
And then a freight expense for $100.
Correct. Good. So exactly like we've talked about in the previous chapter, right? We're going to recognize what are the key things here. So first, purchase expense, right? We know that we bought 100 toys at $1.25. Therefore, my total purchase price is $125. Plus the freight is a separate cost. Right here, $100. And now we're going to owe them because we placed it on an account for $225. Okay? Now let's say upon receiving that inventory, right? So then on January 5th, we called up the vendor because we've opened all the boxes and we took inspected every single cup, and we ended up finding that 10 of those coffee mugs were broken. Now, of course, you can't sell those coffee mugs. So what you were planning to do is you decided that you want a refund. on those broken items, okay? And the vendor, of course, grants you the full refund, okay? So how are we going to record this transaction?
On January 5th, you would do accounts payable for the 625.
Good, good. So here, well, not 625, because in this case, it's not 5% discount. It is, yes, it's 10, all right? So here, yes, because we originally placed it on an account, therefore we're going to reduce how much we owe. Or in this case, if you paid with cash, then, the vendor is subject to send you a check, okay? So yes, we're going to return the product. So we're going to reduce the amount that we owe, and then we're going to create, once again, another contra account, which is called the purchase returns and allowances. So this one's going to go against your main account, which is the purchase expense, because we're decreasing it, right? Our original purchases was that we purchased $100 worth of stuff. Now that we are decreasing it, right? Now we only have 90 items. So in order to reflect that in our journal or in a transaction, we're creating a contra account to say that we're going to reduce my 100 items down to 90, and it's going to cost me $12.50. So therefore, my original price of $125 is now reduced to whatever 125 minus $12.50 is, okay? So there you go, perfect. All right. As far as that's the only thing that you need to know is the purchase returns and allowances. Now here, notice this. We have purchase returns and allowances. So let's go ahead and dive into the next section here. All right. So here, again, on January 5th, all right, so this is scenario 2 or scenario 1, scenario 2, okay, to different causes. So here, you received your inventory items and found that 25 of the cups were the wrong size, okay? So you requested a full refund on these extra large coffee mugs. However, the great thing about what a vendor and customer relationship says is that you can actually haggle or make deals with a vendor. Okay, so in this case, the vendor convinced you that, hey, there's nothing wrong with the extra large coffee mugs, because essentially what you can do there is you could still sell them out to the public. Basically the items that you received from us, we're sorry that we sent you the wrong item. It's not what you were looking for. However, you could still sell them out, right? There's nothing wrong with the inventory. So what they can do is they can convince you, well, since we are absolutely sorry we sent you the wrong sizing of the item. However, we'll give you a deal. We'll give you a 20% discount off of those cups because we sent you the wrong ones. Now, essentially, obviously, the sizing of the cup, right, could pose that they charge more for it, but they're selling it to you at the price that you originally purchased it for, plus an additional 20% discount because they sent you the wrong item. And because you kind of figured it in your head saying, you're right, I can still sell these cups no matter what. And they're reimbursing me 20% because they messed up on their part. So by giving me a credit of 20%, how can I go about this if they're going to give me a 20% discount? Okay, we're attempting to return the items, but they kind of convinced us to not give back the whole thing, but for us to keep the items, but tack on an additional discount. So in this case, that's going to be considered an allowance.
It would still go under accounts payable for January 5th.
Correct.
That would be for the 625.
625. So it's going to be 20% off of the 20 cups. Now, how much was the cups in total? $1.25. So if I'm attempting to return 25 of them, how much is that?
$31.
$31. Now, what is 20% of $31?
$6.25.
Good. So in this case, yes. You figured out it correctly. So if you didn't find out this way, then yes. But if you're thinking about the 5% discount, then no. All right, so here we're only going to discount for whatever we are attempting to return. So in this case, we're looking at our 25 coffee mugs. We're not looking at our whole entire 100 that we originally purchased. We're looking at just those 25 coffee mugs. We're going to calculate the grand total, right? And then discount it for that amount. In this case, right, because the notion here is that we're attempting to return the product. However, the vendor decides to convince us to keep the product but give us an allowance. Or in other cases, we can consider this as a credit. Okay? How they say vendor credit? This is exactly what it is. It's not a refund, it's a vendor credit. Okay? But in this case, again, we're just looking at the accounts as, general. This is a universal understanding. However, whatever company that you go work for, they're going to have a different, terminology for it. But in this case, we're going to recognize it as purchase returns and allowances because essentially this account here, we combine the two because they essentially do the same thing, right? You're still getting money back from the vendor with the notion that you are attempting to return. However, one of them is a full refund and the other is a credit. Okay, so again, because they're both the same thing, you can refer them as purchase returns for the full refund and then purchase allowances for the credit. But in this case, I'm just going to utilize it as the same account, purchase returns and allowances. So there you go. And again, we calculated, right? We're going to reduce the money that we owe. Okay? But in our perspective is we get to keep the extra large coffee mugs and we also get to, still sell them out and we also got a discount on top of that. Okay? So for this kind of scenario, do not confuse purchase returns and allowances and a purchase discount. Even though it says right here that we have the person offered us a discount, you have to understand it in terms that this discount isn't for everybody. So that's one thing that you have to know too, is that discounts are usually applicable to everybody. This is a special discount that they offer to us personally because they sent us the wrong items. So in this case, this is going to be considered an allowance. Okay? Any questions?
No.
Okay? All right, good. And that's it for this chapter, or for this section right here. So 5.2 is we're looking at making purchases of inventory. We got two options, right? If we, for any reason that we return a product, right? You can't return freight. Know that one point right there. You can't return freight. You can only return the product itself. All right, and the original purchase price that you paid for it. Now, there's also other cases where you may need to pay separate shipping to ship the items back, but then again, the vendor's going to give you a credit for that. Most cases, that usually is the idea. But in this case, I'm not going to make it that complicated. So here, we're understanding it this way. If we do a full return, you're going to recognize the full return for the original purchase price amount. Where the allowances is if you were given a discount and you got to keep the cups, here you go, it's an allowance. Okay? Once again, you cannot discount freight. You cannot return freight either. So in this case, you're only subject to just the purchase price. Right? Any questions? Okay. All right. So let's go ahead and do the exercises right here. So this is where we're going to practice everything. So we're going to practice journalizing, and we're also going to practice using descriptions because we have returns and we have allowances. So let's take a look. All right. Number 1, journalize. Assume that all purchases were made on account. All right. Hey.
First one would be April 5th.
Good.
Purchase expense of it would be a debit of 5,000.
Good.
Then underneath it, you would put your freight expense, and you would debit it for 100.
Okay.
Then under that, you would indent for accounts payable
Mm-hmm.
a total of 5,100.
Good. Come on, Y. For 5,100. Excellent. And this one, I'm going to make a note here just because in this case, I'm making a bunch of purchases, but at the same time, I'm also making a lot of returns. So in this case, I want to make sure that I note that I made purchases, right? 1,000 units at $5 each. Okay? Was I given any terms? No, not on this one. Okay, so, okay. So what's next thing?
April 7th,
Mm-hmm.
accounts payable.
Good.
$287.50.
280.
Seven, am I right?
Let's take a look at that.
Or 200 at $5. My fault. Hold on.
Good. So, remember, we cannot discount or refund shipping. So in this case, our only price that we have here is the $5 because we only made one purchase. So there's the only batch that we have is the one that we originally purchased it for, which is the $5 each. So what is 5 times 200?
1,000.
Good. Good. Right? We're going to refund the amount that we owe. So in this case, we haven't paid it yet. So we're going to reduce what we owe. And what is going to be the account here?
Purchase expense.
Purchase is correct, but not expense. What?
Refund. Return.
Good. Returns and allowances. Okay. Good. For the $1,000. And of course, I'm also going to make a note here that I returned 200 units at $5 each, full refund. Okay? So then what happened next?
Purchase expense.
Okay. For the 750 units at $5.75 each, with a freight costing you $75. So, how are we going to journalize this?
Purchase expense for $4,312.50.
Good. Purchase expense for $4,312.50. What else?
And then freight expense $75.
Freight expense for
75 times.
mm-hmm. And then
Account payable for 4,387.50.
4,387.50. Good. All right. And here I'm also going to make a note that I purchased 750 units at $5.75 each. Okay. So now, what happened next?
Return 50 broken units at $5 each.
Mm-hmm. Now, let's look at this scenario real quick before we can, we'll move on into journalize it. I'm on April 15, right? The general rule of thumb is which batch are you actually going to be refunding?
The purchase
On,
April 15th.
oh, well, the purchase on
50
April
units.
5th. April 5th.
why April 5th?
So that's the day you purchased them at full price.
Okay, so we have two purchases, right? We purchased on April 5th and we also purchased another one on April 10th. Okay, so general rule of thumb is usually, once again, when you make a purchase of inventory, you should open up the packages just to ensure that all of them are there. Obviously, if they're pre-packaged, right, you obviously can't open it. But the main idea is that, let's say if I bought coffee mugs and I didn't check any of them, do you think the vendor's going to say, oh, yes, you can definitely return something that you purchased, you know, 10 days ago, even though you made a purchase 5 days ago?
You would just use the most recent.
Absolutely. General rule of thumb is that's how the vendor's also going to treat it as well. They're going to say, oh, okay, so this is probably assuming that this is from the most recent purchase that you've done because I've already granted you a refund for the previous one. So, yes, you can take more and multiple, discounts on one batch. However, general rule of thumb is usually going to be related to the previous one that you just purchased or the most recent one that you purchased. So in this case, I recently purchased it on the 10th and I found out 5 days later because I ended up opening all the boxes that 50 of them were broken. So now I'm going to request for a full refund based off of those units. So what is going to be my journal here?
50 times 575.
50 times 575. Yes. Ooh, I put the wrong date. Okay. 50 times 287.50 is okay. So 2.
87.50.
Okay, so that's 575 times that 50 units. Okay, good. So what are my accounts going to be? Accounts payable, right? We increased our liability because we made the payment on account. So here we didn't make a payment yet, so we're going to reduce our liability. And what are we going to, what's my equal and opposite credit that I'm going to do here? Where am I going to place it? Purchase returns and allowances. Good. Okay, good. And I'm also going to make a note that I returned 50 units at $5.75 full refund. Okay, good. Right. So let's see what happened next. On April 20th. So I made an additional purchase of 200 more units at $6 each with a freight of 20.
So purchase
Correct. We're going to do,
$1,200.
oh, purchase expense for 12, good, for $1,200. So 420, purchase expense for 1,200. My freight,
Is for me.
and then what's
Payable for $1,220.
excellent. Okay, good. And I'm also going to make a nice little note here that I purchased 200 units at $6 each. Okay. Now, what else has happened? Okay, so here, 2 days later, 25 of those units were the wrong color. Okay? And the vendor decided to convince you to keep them because you could still sell them. They're just a different color. What difference does it make? Okay? And then so they offer you to accept, they offer you a 20% discount because they sent you the wrong color. It's not the color that you wanted, but you know, again, you can save it for an occasion to sell it, or you can demand a full refund. In this case, they're trying to apologize for sending the wrong item by offering a 20% discount, and you're willing to accept it. So in this case, how am I going to journalize this concept? Okay.
Accounts payable for $30.
Yes. Whoa. Okay, so date is 4/25. Accounts payable.
422.
Oh, 4/22. Yes, thank you. Accounts payable. Okay, for how much?
$30.
So we got $30. How did you get that number?
I took 25 units at $6.
Mm-hmm. And then,
Oh, and then the 20% discount.
perfect. So 20% off of that total of the 25 times 6, all right, gives you $30. Okay, so good. All right, which account am I going to place that on? Where am I taking this amount out from? Say that again?
No, I'm reading over this.
Okay.
Would that be a material discount?
Okay, so remember, it's not going to be a discount.
Returns and allowances?
It's going to be a returns and allowances. So good. In this case, it's going to be specified as a purchase, returns, and allowances. Okay, so the difference between, once again, the difference between a discount and an allowance is that a discount can be applied to everybody. Everybody can get the discount. This is a special discount. Only you get it because the idea here is that you're attempting to return an item, and because they're trying to make every means to make things right, they offer you a 20% discount out of the courtesy for their mistake. So in this case, this is going to be considered an allowance or a vendor credit, however you want to look at it. Okay? So here we're going to accept that it's going to be a purchase, returns, and allowances. And it is correct for the $30, right? So 20% off of the 25 times 6, right? We're going to take the previous one because in this shipment, we received 25 of them were the wrong color. So in this case, we're looking at the unit price of $6 each. All right. And here I'm going to also indicate that I returned 25 units at $6 each for a 20% discount. Okay? Discount. All right. Good. I think we have a couple more. So here, the last thing that we have is you on April 25th, you purchase an additional 500 units at $6.25 with the freight costing you $50. Okay, so the last one, what are we going to enter here?
Purchase expense for $3,125.
Good. Purchase expense. For the 4,325.
3,125.
Okay. And the freight expense?
$50.
For $50. So, and then the last thing that we have here is
Accounts payable
for $3,175, right? And last thing that we're going to do is we're going to top it off with purchased excellent. Right? So there you go. That's how we practice making our purchases, right? And if for any reason we find anything wrong or make a returns and allowances, right? We have to associate first off, how do we pay the purchases in the first place? Do we place it on an account or do we actually pay with cash? So in this case, if this was a cash scenario, right? If I paid straight up the $5,000, right? And I find that they sent me stuff and I ask for a refund. What am I going to be expecting to see in the mail? Exactly. You're going to be expecting a check back, or what most cases a lot of vendors do is they hold on to that money because if you potentially not pretending if you potentially are going to make a future purchase, what you can do is you can use that to apply for a future purchase. Okay, so once again, that's a little more complicated stuff and you'll actually get to take a look at that in QuickBooks. So a little heads up there. Okay. So with that being said, excellent job, everybody. Any questions in regards to purchases or returns and allowances, discounts, anything that we learned today? Okay, perfect. Excellent. So, again, things that we're going to look forward for tomorrow is now that we finally kind of understood how